Okay, I'm getting a lot of questions on this. Open enrollment starts less than a week from now as I'm recording this. So let's just talk about what the situation is for health insurance next year as it currently stands. Something could change in Washington, D.C. that could negate everything I'm about to say. But for right now, we have to deal with what's the situation now. And as it stands right now, premium tax credits in the Affordable Care Act will still exist next year, but they will be more compressed than what we've seen the last few years. So it's going to be critically important that we really dial in on what is your estimated household income going to be in 2026. This has always mattered, of course, when it comes to determining the premium tax credits, but it's really important because as it stands right now, if you make between 100% of the federal poverty level and 400% of the federal poverty level, you will be eligible to get premium tax credits. Now, they won't be as high as they've been, but you'll still get something. You'll still get relief. And that's important because the prices, as we've said before, are going way up this year. So what do we need to do to keep you between 100 and 400% of the federal poverty level? Let's take a look at the numbers. So what I'm trying to do right here is I want to show you the federal poverty level because that's what the subsidies are based on. And so the first thing, you have to have at least an income that is 100% or more of the federal poverty level. So to show you that, we're going to look at this column right here because we're not in Alaska or Hawaii. And this is the minimum threshold that you have to retain income-wise to get subsidies. And you can see where it goes depending on the size of your family and your tax household, okay? On the top end, we want to look at 400% of the federal poverty level, because this is under the rules as it currently stands, the 2026 rules. If you are above this number, 400% of the federal poverty level, then you will not be eligible for any kind of subsidies at all. So let's take a look at this. Again, the column, we're not in Alaska or Hawaii, unfortunately, but this is the top end income. So if you have a family of 4 and you make more than $128,600 next year, you're not eligible for premium tax credits. Now, of course, this could all change if Congress were to do something, but for now, this is where we are. So this is an important chart that we need to consider for a minute. I'm going to leave it up here just so you can take a look at where you need to be. And we'll have this available on our website too. Now look, I'm not a financial planner, I'm not a tax guy, I'm not a CPA. I can't help you with that side of things, but I do want to make you aware of where those numbers are, because I know a lot of you do have the ability, because you're self-employed or some of the things, you do have the ability to manage your income a little bit to try to keep it in those levels. Another thing you can do, and I've talked about this elsewhere, is all bronze level plans on the marketplace next year will be HSA qualified. So you can use a health savings account. That's a good way to move some money. So it help pay for that healthcare and lower your taxable income. So that's one strategy. There's probably others. Talk to somebody professional about that. But I just want to give you a heads up. Be thinking about your estimated income for next year because it's really going to matter.